Since I'm loving these live videos of breakdowns for the week, I'm going to be continuing these with EU and GU going into this week, talk through the weekly breakdown and the trades I'm currently in, and also ones that I've set up but haven't been tagged. Interesting week. I think the first thing I'm going to speak about is why have I not got DXY up. I've decided to move away from DXY. Looking at it, it was messing up my confluences with EU and GU too much. I was relying on DXY way too much. Realising that everything you need to know is on the charts, whether that be EU or GU. I feel like, yes, sometimes DXY can save you out of a potential loss. Other times it gets you all in your head. And for me, I want to test out the next few months without it because I've just gone through a load of data to see if there's a correlation between the trades that I'm taking and how DXY looks relative to these pairs. And there's not any conclusive evidence I can gather, which may pair. And I think now that's what I'm trying to do. If I'm looking to escape my job, I've got all the tools I need. I don't need to increase my pairs right now. I don't need to go crazy on taking more trades. The things that I've done foundationally have worked for the last year and a half. I don't need to change them. You know what I'm saying? So that's got to be kept to one side. I have adapted my strategy slightly to the live conditions, which is always good to do. I feel like now I know that as a profitable trader to be able to understand that. So let's go into this week as a whole. How did EU close? We saw, obviously, price last week, gap down, fill the gap, done the weekly imbalance fill. So it was looking quite bearish. Candle body closed below the previous weekly low, which left an imbalance fill for this week. We've also seen a big wick to the downside. The wick was actually bigger than the body. So partially, maybe that you've been bearish from maybe this rejection and people have been playing sells all the way down into these areas, which is fine. I think in the way I trade now is I'm still bullish because, yes, what we are doing is seeing that the 2023-24 highs are being cleared, creating higher highs. We're in this retest area at the minute. So there's actually no saying that we're going to definitely go down. Something I also look at is the strength relative of the upside to the downside movement, especially if we obviously see the big bullish candles that we've been seeing. 4 candles here have only corrected only half of this big move that we had up, which doesn't signify too much bearish momentum. Also on the fact that we've left no imbalances here. We've obviously left a wick and we've come into that wick already, but we have not left any imbalances. So what could happen is if you get a bullish candle closing on the weekly, you're not going to have anything in the way now stopping this to go up to the current yearly high. So I'm bullish on EU. Obviously the weeklies are bearish, which is a bit counterintuitive. My biggest reasoning behind what I wanted to see on Friday was going onto it. I wanted to see Friday actually break the weekly. So this weekly here, it was looking good. It was actually looking really good to break it, and it didn't. In the last couple of hours, we saw price retrace. So to me, it didn't really give the best bearish sentiment. I think also I spoke about last week, this wick here, this wick is was just weird because it didn't really give you a solid sell confirm on Wednesday after it done that imbalance fill. So it's almost like that high become in jeopardy of being taken out, which was previous weekly high. Many traders might be looking at this saying, we've seen an engulfing bearish candle, you're going to go down. Like I said before, the weekly's still bullish, so I'm not going to sell it. I would also look at this as a fake out of this weekly, and then price has made a high and pulled back and failed. So in theory, somewhat of a higher low potentially could be setting up here on Monday morning. So I'm looking at price really leaving this area and going up to the highs. That's my bias. Now on GU, I'm going to actually speak about this. Very interesting perspective from this point, because I was bearish after this weekly candle closed bearish, and I did obviously look for taking sells. Looking back, this close here gave me options to buy, and the buys were, from what I'd look at now, were from below the weekly low, because that wasn't enough to go up. I've got to change my bias at that point from bearish to bullish again, because we're actually coming into this area and leaving it. I'd still believe that because of this wick, that wasn't enough. So I'd be setting up 2 positions. One position here with the high, and this is what I should have done, but obviously I've been doing loads of testing. But I thought it would be good to show you guys kind of what I'd be looking at. And what happened previously as well when you saw these fills is they went from that point. Obviously it's been different this time. We haven't actually seen the fill yet. So what we saw then coming into last week is we would have lost this trade, and then this trade would have got tagged in, and from that point it's just left that area. So from that perspective, it's a very nice trade. And I would have took one loss, and I should have been out of the sell at the very start of last week. And, you know, up 4R now, would have been up 5R, and the target's really up the highs. But really, that's it. I think I'm now learning, if I'm trading higher time frame and I'm trading the trend, and I spoke about the weekly, you know, what probability after taking this extreme low out are we not going to break through? I'd be very shocked. And that's why, yeah, we've been gathering liquidity wicks. I understand 100% that there's a probability that we could come in. We've come into these liquidity wicks. That's the thing. These are weekly liquidity now. I need to determine which is more significant. The wicks that are at a high point, which we might now just see price die. It's a little bit uncertain what we're going to see. But I need to trust the bullish trend until we confirm we're not. And at that point, it needs to be this week closing bearish, which gives me this liquidity low to play to and be bearish to. At the minute, there's still nothing to say we're bearish. And that's the hard thing, is many traders are going to try and call the top. And that's what I've done before, and that's what I did only a few weeks ago. The trade I took wasn't invalid. I would still take that again, but I would have got out the sell earlier. I'd be looking for that buy. So going into this week then, I'm straight up bullish. You know, I spoke about as soon as we got that engulfing bullish candle here, I was looking for buys on last Wednesday. That didn't come in. And coming into this week, I want to see price give us signs that this liquidity on the weekly isn't going to be an issue. As we go to Monday, what did we see yesterday? We saw price close bullish. Now, I get it. We gapped up on EU. We haven't left the wick. So this could be a top wick of the week. But I'm not bearish. So I've got to trust that this is the low and the leaving this area, 1.11500, we're going. And we're going up to the high. You've got to choose one way or another what your bias is, right? And that's the beauty of trading. You don't know if you're going to be right. And that's where many other traders may have the complete opposite idea. And they could win this and I might lose this trade that I've took this morning. I'm going to go through that in a second. But I didn't talk about GU yesterday. What made me look at this yesterday, because I was a bit wary of these wicks, what made me decide that we're actually potentially going to continue and go to the high? Well, price come into the first of the two wicks, which are these two wicks yesterday. And Monday's candle actually closed above the first wick after tapping into the second wick. Therefore, this wasn't enough in my head to come down because we've engulfed this high. And this is a significant previous weekly high, isn't it? So there the option is now for the third wick to get taken out. I'm not saying we're going to make a new high, but the highs are there to be tested now, and I feel more confident in that. So we know that was previous weekly high. And I just think me just talking through the analysis now makes so much more sense than trying to justify trying to sell it. Because it has not shown you decisiveness on the higher time frames to sell it. At this point, I think the chance to sell happened. I was proven wrong. And now I need to give this buy an opportunity and a go. So yeah, feeling good about this week, regardless of the results. Obviously, this is the idea I had today on EU. So straight up, I have allowed myself now to not always be looking for limit orders, because I know for a fact that if I was to do that today, when we already saw price move up hard yesterday and pull back, and when we were in here in Asian session, I'm looking at what are we trying to trade within? Well, I would say I'm always setting up off the 1 hour leg, and I'm trying to understand, okay, where are we going to head? Because I always want to look at the last POI within the leg as my stop loss. So my stop loss goes below this order block, and that's my safe stop loss. As for the trade, if I can get in around here with a stop loss there, and I'm targeting EU and I'm predicting price will run to the highs, then I'm looking at price getting up to here. And it may seem like an extreme area, but really that's the move. Because if this is the pullback we've seen since, when was this? End of April, and we've pulled back, creating lower lows, lower highs. Well, lower low at an extremely higher time frame potential rejection zone. Price creates a lower high, and we've engulfed that. We created resistance, failed. This high was in jeopardy. We closed strong after tapping it. In my view, that signifies potential upside to the high without us seeing a pullback. And like I said, that's the low. So that's my trade I've took. I've not waited for a pullback below Asian low because I don't need to see that to catch the R that I want. So I've got in, it was about 6:30. If we go to where 6:30 was, Yeah, it's around here. So it was a 4-hour trade, and I'm looking to pay up to the high, and obviously I can hold this for up to a week or however long it takes to win or lose. This has to be the low if we're going up. If we're going to go down for the week, I will see at the end of the week that we have broken this gap and we'll continue down, and I'll catch more sells. And that's really the EU analysis there. So that trade I've took in the morning here, and we're around break even. We've gone into a bit of drawdown, but ultimately what I'm looking for in this is to see a further high made past here, and then we should start seeing something like this, and we should start running up clean. So that's the analysis there. But going into today, based on that close, I deemed that this high could be cleared, so I've been looking for a buy. We didn't get tagged in, unfortunately. We had our entry over here, so we were looking within this leg, and this is where it got a little bit trickier because the leg wasn't the same. It was a bit of a bigger leg. So overall, I was looking for an entry here, just under the 50%, because I couldn't get the R. My stop loss had to be around here, 60 pips, and I couldn't get the R to the high. But like I said, if I've realised now, I should already be in 2 buys. Obviously, that one last week, medium time frame, didn't get tagged in, so it's not mine to take. But obviously, this buy from here potentially was mine. So I should be holding trades in way more profit than now. So I knew that was unlikely to get tagged in. It was around just over 2R. Not stressing too much about that not coming in. Coming into Wednesday morning, we do have big news today. So we're going to look at that for the pound. We are expecting to see inflation rise above 3% on the yearly. We haven't seen that back since last year in March. One thing I would say is we've seen a couple of lower than forecasted prints below 3%. So we're going to see if we come out maybe a bit lower than 3%, or if we do stay above 3% with forecasted. Now, it's a big jump, 0.7 expected. Some aspects, higher inflation, would push the pound up. To an extent though, that big of a rise, I'm thinking that there's cause for not concern, but maybe a lack of confidence that inflation is going to start rising quickly again. And the only problem with that is the target's 2% plus or minus 1. So we're looking at between 1 and 3% is what they try and target. And if we do see it rise above 3, maybe we won't just see as strong of a pound this morning as we're expecting. Now, better movement overnight, I think as a whole, why we're seeing this push, and it's looking good. I think we're unlikely to see a top wick for the week. I'd be very shocked now us moving 200 pips to the upside. We're going to flip. Like I said before, there's nothing in the way of this coming up, even on the daily time frame. If we're looking at the imbalances we made this one. It got completely eradicated. Then we formed this one. And I think to an extent we might have held that. We'll have a look at if we did. So we did hold that just. But we know we've tapped the top of it 3 times. It kind of validates it. And then we've seen price run down with an imbalance fill. So there's nothing in here to have a problem at. And you could tell that because look what's happened this morning. We've just gone right through that high, which is last Thursday's high from the previous week to last week. And I'm expecting a clean run up now. We may see something like this. We might see something like this morning. This and then continue. Really, I'm expecting upside now to hold. We obviously didn't get above yesterday's high on the close yesterday, but we've already pushed significantly. And I think why this is going up, and if a lot of traders don't understand why we're not seeing the dollar strength, we're nearly at the highs on GU. That move was really good that I spoke about yesterday. And yeah, I think a few losses would have incurred, but we would have caught the win. And yeah, changing the mind on the bias, you had to be quick to do that. And I think this is where you can't get too caught up in why we're going to see a fall when there's nothing telling you that. And I called it, especially around this area. What did we do last time? Fill went up. What we done this time? Fill went up. Just repeats. You've got to look at current price action, the way it's moving, how volatile it can be, switching from bearish to bullish. Make the action that you need to make for the buy, because as soon as we did it last time, we created a lower structure. We saw a lower high form, engulf bullish. We never come back, made a new high. Again, we made this low and we saw lower structure forming. We broke the lower high and we carried on. So we're seeing indecisive bearish candles coming down because we're not continuing down with significant strength. We never saw 3 candles come down at once. We then just saw straight upside. So I think regardless of the CPI result, we're taking out this high. That move's then done. And we'll be looking at, can we continue to make higher highs or can we not? I think looking at the dollar, obviously, there's just too much uncertainty, and you can see it. I don't want to go back too much to the DXY, but why we're seeing this is because we were never bullish. And I also wanted to speak about, you know, the safe asset at the minute. You could go onto gold. You could probably go onto the JPY basket, and you're just seeing further moves up, you know. And these are the safer assets when the dollar's not doing as well. And obviously, yeah, we've seen a huge wick down here on the JPY, and we've seen decent upside ever since last year. So clearly other assets are being pushed because they're not putting money into the dollar as much. And it shows a lot. And when you see in the credit rating, Moody's put them down from a AAA to an AA1, that's also suggesting that maybe the US isn't as strong or as safe of an asset as people previously believed. And that's a significant thing. And we saw that news over the weekend, and we didn't really speak about that. But this come all the way down from last week somewhere. And I think that was potentially a catalyst to see the upside. Here we go. So we saw this come in, and to an extent, this is huge. Now, I don't know if this would be already priced in, but it's just another knock of confidence to the dollar, isn't it? And, you know, if we're seeing the strength continue now on the dollar, on the pound, we're seeing strength continue. And yeah, really, we're just looking at, you're not really calling that as a buy now on the dollar, are you? You're looking at that going, that's coming down to the lows. And it may stall, and we may see price actually create higher structure here and then go up. Maybe this is a pullback, but at the minute, what are we seeing? We saw this. This move was I believe this is where the institutions are making their moves. You know, these fills at the very high, sell, get out here. You know what I'm saying? That move is easy to catch for them because they knew this is a pullback. Very, very exciting stuff going into the end of the week. We're already seeing all this news coming cluster today between the PMI for pound, euro, and the USD. Bit of a mixed variable here. We've got pound looking really bad on the manufacturing. Services looks okay. German and French don't look good at all. Below 50 is really not ideal. And the fact that we've been seeing multiple prints at that has not shown strength in the euro. And then we've seen USD looking good. We're looking at 52.3, both above previous, both above forecasted, and both above 50. So that looks good for the USD. But I'm interested in how we set up for the rest of the day here, going into the end of the week, because we spoke about EU. We spoke about, what did we do yesterday? So price ran up yesterday and just ranged the rest of the day. And what we're seeing here is the idea that if price is going to close bullish like this, next week looks good to the high. The daily time frame though, we've obviously seen price come down today. And are we starting to see a repeat of this potentially happening? We're still seeing this, and we've still got this low to test. So, and that's what I'm trying to identify now going into the rest of the week is this is the potential for price to close bearish. Already has to run 130 at the end of the week. To me, with the news that's coming, if we're looking on the 1 hour, is there a lot of dollar strength in this scenario? I don't think there is anything to say that there is. If we're looking at the 1 hour, we've seen from the lows here, we've had price. Once it retested the weekly again, we've seen price run up, obviously consolidate, run up, consolidate with a bit deeper pullback now. But it doesn't look bearish. I think with this news coming in, bad for euro, good for USD, we should be seeing a significant push back to the downside here if we're going to go down. And with the weekly having to do so much now, to close below this weekly for me to be solidly bearish, 150 pips, it's possible. Don't get me wrong, I've seen some crazy stuff. But with tomorrow, we haven't really got any news. It's looking very dry apart from pound. I would look at this now and be going, okay, we may see today close bearish, but we may see something like this. We could also see a deeper pullback way into here before we go up. And that's what I think. If we close above previous weekly high, we're probably good for upside next week. If we don't, we may see a bit of indecisiveness. But ultimately, yeah, I'm not going to change my bias yet. We've still got this low to play to if we get further next week upside rejections back into this wick. And we'll have a look at that. As for GU though, I mean, the move down here from the lows was really nice. We obviously missed that, playing up to the high. We've now got to sit and wait for the next one. That's all good. That is trading, and I wouldn't have caught that unless I'd done the testing out. So now I know that this is a way that my edge has improved. I can obviously work on that. Really going into the week, then I was right until we saw that break. We obviously were a bit slow in here. We saw that break of previous weekly high and a close above it. That was a 3 weekly liquidity wick. That just been cleared. So that wasn't even a thing to go down. So GU is no way bearish yet. Identifying where I'm going to be bearish going into next week is not, because I'm really identifying now, can we break above this high? If we break above this high, upside straight up, we're going to get a pullback continuation or just a continuation. If we close above previous weekly high, or at least decently, somewhere in the region of 134, I'm still going to be looking for upside past this because it's a strong weekly close, and I would say that there's options for upside. Obviously on the daily time frame, it is looking pretty interesting because we haven't seen a break of this high yet. So we haven't formed a higher high off this high. So if we don't, there's more chance of a deeper pullback. The fact that we've seen today not really been able to come up significantly, and we're very slow here with the way we've been moving. We did do the imbalance fill this morning, still haven't really took out this high yesterday, which could just show some indecision at the highs here. But really, any sell move from this period has been played, and any buy to the high has been played. So past this area, you don't know necessarily until you see really more significance with the weekly closure. We could do anything still. And I think that's my week wrapped up. I think GU, obviously the monthly's flipped. You're looking very bullish. And you've then took out current yearly highs to make new current yearly highs. If we're going to look at EU, we're seeing price. It looks to me like we've retested this area here around 1.11500. Price still hasn't flipped bullish yet. We've still got this wick to fill, and we may flip later on in the month. But yeah, we're going to have to see. I think at one point we were flipping yesterday. We've got to see how we finish this week. But very, very difficult price action on EU. I think there is indecisiveness if we're going up or down, especially with the weeklies trying to close bearish so many weeks in a row, then seeing this week really come up hard. And we'll have to wait and see what we do here, because I would say this is potentially, as long as we respect maybe this low here on the 4 hour, we could easily just pull back deeper and then continue going back up. We need to see more decisiveness for downside, and that's going to start with taking out this low, and then we're probably going to see a continuation back to the lows. Trump news is back. We were quite quiet for about a week and a half, 2 weeks. We've come back with this big one. 50% tariffs on the EU starting in June. I reckon EU will retaliate on this, and to be honest, don't know where this stands. We've obviously seen the euro drop initially against the dollar, and then not sure which one come out first, 25 hours ago. This come out after, but we did see this about the, tech stocks like Apple have dropped loads from this, manufacturing in the US instead of in third world countries, which is obviously going to increase the manufacturing costs and labor costs massively. Overall, it's not looking good for the dollar, and it really hasn't been with the credit rate and stuff, and now this coming in. We have seen a bullish week on euro, and I think we're looking good for next week now to head up. As I said, look, it's always going to be a hob on this week, whether we're going to go up or down. But I think obviously now, going to next week, we could test these highs, or at least come up close to them highs, which obviously where my target is at. GU just pumped. It looked well good in the end. It just flew up. So we're making further highs. I do think this area, 136,500 now, is a good area to come up to. We may see price just run up there before a pullback, but we may get a pullback, which would be nice to see. We're obviously expecting that now because, yeah, we're at new highs, and overall highs here back from 22 that we've got to test. And really, yeah, just wanted to show my accounts finished the week. No trades on the FTMO. Creating some disparity between what I'm actually trading on certain challenges and funded accounts. I don't want to lose all of them at once. And yeah, it is a slow process and journey, but that is the way funded traders should approach it. I know there's certain traders that have had huge payouts, which isn't me yet, and that's why I'm still taking the challenges slowly. They're running in the background. I'm trying to get out of funded drawdown right now. The profit's not even on my mind. And yeah, this is why that the way I do things is so relatable, and that's what I want to be. I don't want to be the best trader around. I want to show everything. I want to show the flaws, because I just want you to know this is the right way to do it. You don't have to worry about passing the challenge within a week. You can do that, but only when you've got enough allocation. And really, you can't pass these prop firm with high risk. Even nowadays, you risk 2-3% on a challenge. You're not going to last long on that prop firm. I mean, I've seen traders recently with FTMO for risking over 1% be banned, and there's too many variables now, especially as soon as they took off that 30-day rule and there was unlimited trading days. That's where the dangerous thing come in, and that's where prop firms had to look at other areas to create further profit. Fivers though, we're looking all right now. I think we're down about $500 on the equity. That's not really updated yet. So this trade comes in and we'll make about $1,500 to $2,000, which will be nice. Funded next. The actual equity now is 93, so we've only got 7% to get back. If this wins, we'll be down 5%, which at one point this was at $800 left. So we had 90,800. That'll be good to get back. Obviously, then we had Think Capital, which is running at around 3.5% drawdown. This trade will put me into near profit or profit. And then Go Find a Trader, it's my first trade in this challenge, which will, currently I'm nearly up 2%. It'll put me up about 5.8. Another thing I want to speak about is understanding the prop firm rules. You've got to have, like Fivers for Go Find a Trader, you need to have 3 profitable days at a 0.5% profit. This means if this trade wins and I make 5.8, I'll have 2% left to pass. This just means now I'd have to go into the next few trades risking 0.5, whatever the R is. If it's a 5R, I don't need to risk more than 0.5%. And if I lose, then that only knocks off $500 profit. So this is where, when you go into profit, there's no point risking the same amount when you're near passing the challenge, and you want to account for the rules that are in place. Not just that, there's consistency rules as well. So one big win like this may not work if you need to hit a certain consistency score, and you just got to be watching out for these hidden rules, because you might think you've passed phase 1 or 2 and then it turns out that you still got to make money even though you're past the profit target, which I don't think is really fair way. But as I said before, these firms now have to find other ways to make revenue and profit. And that's really it going into next week. I do hope this month has been better. The drawdown is slowly clawing back, which is how it should be done. There is obviously some good moves that I would have caught this month if I just had seen things a bit differently. That is the process I'm sharing though, of constantly evolving and learning new ways and getting better, because I know I'm still far off where I want to be. But every week and every day, you have to trust that you've got to learn from the live market more than you can learn from the backtesting. Like before, you might have backtesting results like I didn't reflect the live at all. Then I've realised, well, this is why. Now I need to adjust and reaffirm that the data that I've got now is more likely to be caught in the live market, because it can be, any trader wants to have a 40R, 50R month back to back, and they go, that's what my data shows. Yeah, I mean, so do mine, but when I'm catching a maximum of 7 to 10, there's clearly things that aren't going right, or something that I can't reflect in the backtesting that the live then obviously shows, or reflects in the live that in my backtesting proves otherwise. So yeah, these are all the things that you've got to consider. It's a constant evolution game, especially with the market conditions this year. It's so different to last year, and yeah, traders of 3+ years of experience have gone through this at least once, and this is not my first time to go through this, and they won't be the last, I'm sure of that. And that's why just getting funded and just being profitable for a year is just the very start of your journey. You want to be profitable for 5-10 years, there's things you have to do that you would never had to do in your first year of profitability, and that's where, if you're not careful, you will lose your edge, because the edge will only last so long. But yeah, take care guys, see you next week, see you later, peace out.